Hey guys, good morning and welcome to Real Estate Steals, Deals, and Opportunities. Today we are going to talk about market cycles where it relates to real estate. So let me ask you this question. What if you had a crystal ball that could tell you where to invest, how, and when? How could that change your investing decisions and, of course, your financial benefits, right? So today we're going to talk about the real estate market cycle chart and how to use it, okay? So this is basically the chart, guys. So it's very simple. There are 4 market cycles, and we just keep repeating ourselves. And you can go back in time and see how this market cycle chart, is accurate. And you can start now and move forward. And if you follow the details of what moves a market cycle, then you will know exactly when to do which strategy. And we're going to talk about that today here. And of course, I'm going to keep it short and sweet. I've had already 2 cups of coffee, so I can talk quick. Fast. Okay, so market cycle 1, as you can see, looking at the chart and not the words, okay, as you can see, market cycle chart, we're on an upswing. Things are appreciating. We're going up, and then we peak, okay, and that is a market cycle 2. So there's a different economy, of course, in the peak. And then we see going down, we're in a market cycle 3. Prices are falling, okay, values are dropping. And then we get to the bottom of that, and that is our market cycle 4. We're at the bottom. Things begin to change and we go back up again. So there's no set amount of time. You can't say, oh, we're in a market cycle 1, so in 48 months we'll be out of this. There's no amount of time that triggers when we switch cycles. It is merely all about the data that moves the market, and that's what we're going to talk about today so that you know how to look at that data, monitor it, and based on that data in which cycle we are in, what you should be doing. So looking at that, a market cycle 1, guys, in a market cycle 1, the number of property on the market reduces. Why? There's a demand for property and the supply begins to dwindle, okay? Properties sell quickly because of that demand, okay? And because of it, things are selling quickly, and that lower supply and the higher demand drives the prices up. The unemployment rate is low. So the economy is doing well, all right? And economy drives a lot to do with our market, right? And so real estate prices and rental rates increase, okay? So as the demand maintains its consistency, the prices go up on rentals and on real estate values. Okay, so just based on what I'm telling you now, you can see that we're in a market cycle 1 currently as I'm teaching this. However, a lot of people are going, oh, we're peaking. And so you'd have to look at the amount of supply you have and how that's moving along in the areas that you are investing. So this market cycle chart and these different market cycles are not worldwide. It's not like, hey, this is where we're at and this is what's going on in the world. I invest in one county, and within that county, I can have a different market cycle taking place in one city versus another, or one subdivision versus another, just based on the attraction for that community or that city. Maybe something special that's going on in that particular area. So when you are investing, you're going to want to monitor what moves a market through its cycle in your particular areas, okay? And you monitor those things closely. And I'll give you this warning. If you are following the news as your guide to what's taking place in the market, you are already too late. So by the time the news station is telling you, oh, you should be buying or you should be selling, it's already too late and you've missed your time frame for doing that. So if you are in real estate, you need to be monitoring the real estate market cycles so that you can reduce liability and risk and increase your success and your financial gain, okay? So market cycle 2, we have been in market cycle 1, things are appreciating. So now how do you tell when we are going into a market cycle 2, okay? So for those of you in our current cycle here locally, these are the things you're going to be looking for to know that, okay, things are going to be turning. So the number of properties on the market are still increasing, all right? The number of properties on the market are increasing here. So that means that supply is growing and the demand is reducing because the number of properties available for sale are decreasing, okay? Increasing. Unemployment rate increases slightly. So there's a little bit of hiccup in the economy, and that, of course, drives our markets. property sales begin to slow down. So now what you'll notice is if you monitor the days on market, they begin to gain in number. So properties that were selling in 30 days, maybe now they're selling in 60, and now we're seeing properties on the market for 90 days. So we will see that properties are staying on the market longer, and the inventory of properties available for sale is beginning to grow. So as a real estate investor, this is your trigger to reduce the price of your flip homes and get them sold while you still have a profit. Okay, don't hang in there because you're going to end up holding on to them or potentially losing money unless you wait to sell to another market cycle one. Some of you real estate investors don't have the ability to do that. Your money, your profit, your paycheck is tied up in that property. So if you're not watching this cycle and monitoring that, you will lose money. All right, property sales begin to slow down, as we mentioned, and prices are still on the high side, though. Everybody wants what their neighbor got, so no one's willing to drop their prices yet. But guys, this is business for us. We can't hold on to a profit we're hoping to get when we see all the writing on the wall that it's time to sell. So if you have properties on the market and your profit's tied up in them and you do not want them to become rentals and long-term holds, then when you see market cycle 2 taking place, you have got to reduce your prices and unload those properties while they will still appraise, okay? Market cycle 3. All right, so we've peaked and now we're actually on the other side and we're starting to drop. So prices are beginning to drop. That's why you can't wait for everybody to drop prices and then you follow along. You have to be ahead of the herd, okay? And so you've got to have already dropped your price and get your property sold. All right, because now prices are beginning to drop because people who need to sell, they're going to begin to drop their price in order to sell. The desire for buying drops and the demand is down. So supply is increasing because demand is down. And now it's no longer a seller's market, right? It's more turning into a buyer's market. So you have more opportunity as a buyer than a seller, and that's who you want to be. So the unemployment rate increases some more. So our economy is not doing well, and real estate values are low and keep falling. Okay, so you do not want to be owning your flip properties during a market cycle 3. You're going to lose money at this time. This is your time to turn into a rental strategy, a different exit strategy, and carry that house until appreciation comes back again. You will make money on it. You might even make more money than you ever had planned on making before if you have the ability to now monitor the cycles and hold it to the next market cycle 1. Okay, market cycle 4. Properties begin to sell. See, we're turning the curve again and we're starting to go back into a market cycle 1. So there's less time on the market. So we start to see, if we're watching days on market, we'll start to see these long days on market starting to decrease. Properties are beginning to sell. The unemployment rate is decreasing. Well, something's turned in the economy, and the economy in this area is doing better. It's doing well. The unemployment rate is decreasing rather than increasing. Real estate values and rents begin to increase and sale prices begin to rise because we're starting to see supply starting to dwindle again and demand for buying going up. So these are all you have to look for in order to monitor where you are in the market cycle and know what you need to do with your properties next. So I'm going to reiterate, now that I've explained what to look for in each cycle, of what you as a real estate investor should be doing in each market. So in market cycle 1, you can wholesale, you can buy and flip because things are going well. As a matter of fact, things can be going so well that you might need to overpay for property because by the time you put it on the market, the appreciation will have caught up with you and you will still make your profit. So as you see market cycle 2 coming, you can still always wholesale, guys, because you're not closing on it. You're not taking the risk of owning that asset. So if you are wholesaling, you better really think through a different strategy and make sure you're prepared for it, depending on which cycle you might own that property through, okay? If you are a flipper, then market cycle 2, anything that you own, you want to begin to drop the price and unload it. Now remember, don't guess on which cycle that you're in. Look at the data for that particular neighborhood. Now myself, as with access to the MLS, because I'm a broker, everywhere I own a piece of property, whether it's a rental or it's a flip, I have created a search that 2 times a day, the MLS will send me search results for that area. I can see who's on the market, how much they're asking, what's pending, how quickly something sold. I see all the data I need in real time every single day to tell me what I should be doing with my property that I own in that neighborhood. I can tell that, wow, they're on the market for a day. I can expect to price my property aggressively and get it sold quickly. But if I see reductions, well, I better come out new on the market, competitively priced to move my property quickly, because I'm starting to see that I'm capping in that neighborhood. And now I also have to know what's going on in the economy. And it's not just the local economy as well as what's going on in the world, because as people get scared, they'll be afraid to spend money. So I need to know if that's a world situation that's affecting every market, and it's going to affect me as well. I also might notice that, hey, interest rates have just dropped and there's this incentive to go out and get a mortgage. So that will drive a lot of demand, and I could take advantage of that. So these are the things I'm looking for, from the world all the way down to my little dot in the planet, right? Okay, so market cycle 3, again, I can still wholesale. All I need to do to wholesale is buy cheap and sell cheap. So in market cycle 3, I am probably selling more to landlords, people that are taking advantage of buying something cheap right now because it's a buyer's market, not a seller's market. So we're going to buy cheap and we're going to hold those things as rentals until we come, out at the other side of that 4 and come into a 1. So I want to make as much money as I can in a 1 and 2, and then buy as much real estate as I can in a 3. Now, the beauty of watching and following my chart is that I want to get as many partners and as much capital as I can, because as I see in advance that a market cycle 3 will begin to dip into a market cycle 4, well, then in a 4, I want to buy as much property as I possibly can, while people in the world still think, wow, we're dropping and we're falling, and if I don't sell now, I'm going to lose even more. So I want to buy as much property as I can in a 4, because I'm going to ride the appreciation wave and then ultimately sell it in a market cycle 2. So I might want to buy things in a 3 and 4 and hold those things. And it could be a few years that I'm in market cycle 1 and 2, right? It could be several years. We don't know how long we'll stay there. But the appreciation that I will gain being able to hold all of those properties, it could, be enough to retire on, because I made the right decisions following a market cycle chart and the data that drives that to know what to do in that market. So I'm not going to belabor that in the interest of time, but this is something that you can study. This is something that I teach in my book, Exposing the Truth Behind the Lies of Real Estate Investing. It's a $15 investment, and it will truly change the way you do business if you can study things like this. If you are interested in buying properties in South Florida or learning more about investing, you can reach out to me. I'm the broker of 32 West Realty. I cater to real estate investors. We follow these strategies that I teach you every week here, and we also help our clients follow these strategies, whether we do it for them or with them. And so you can reach me at this number, this email. You can find our book online at our website as well if you're interested in more information. And so lastly, if you enjoyed what you learned today about market cycles, then learn more about real estate investing and other amazing topics online via live interactive video conference classes at learnfromgreen.com. When you increase your knowledge, you increase your income. For 15 minutes today, I guarantee you learn something that will change the way you buy and sell real estate, that will definitely make you more successful and more profitable, just because you are able to log in and learn from Green today. So I thank you for tuning in, guys, and we hope to see you again, and have a great week.